Welcome to Geojit Spotlight. While markets have been experiencing record highs, there are concerns about the sustainability of this rally and the potential risks involved. Additionally, investors are eager to identify sectors that are showing strength and explore investment opportunities accordingly. Dr.V.K Vijayakumar, Geojit Chief Investment Strategist, join us to share his views on the current market scenario. Welcome, sir.
Thank you, Abhilash.
So markets are at record highs. Where do we go from here and what are the likely trends?
Yes, the market is at a record high. During the last more than 2 months, the rally has been very strong. Now, it is important to understand that this is a global rally. This is not happening in India alone. Globally, markets are rallying. In the mother market, the US, the S&P 500 is hovering around 52-week high, 1-year high. In Eurozone, Stocks 50 is at a 1-year high. Coming to Asia, Japan is having a big bull run. Nikkei index is at a 30-year high. In Taiwan and South Korea, the indices are at 52-week highs. So this is a global rally. And the most paradoxical thing is that this rally is happening when the global economic growth is very, very sluggish. So how do we explain this rally? What is the rational explanation for this rally? The rational explanation is, last year the markets corrected sharply. And that correction was the market discounting a US recession early this year and the global economy also being impacted by that US recession. But the US economy continues to be strong. Now there is a view that the US might even succeed in completely averting a recession. Growth will be slow, a recession will be averted. So the market was actually wrong in last year discounting a US recession and its impact on the global economy. That's why the markets are bouncing back now. Now, the answer to your question, where do we go from here? We are at record levels, but I don't see the market continuing to rally beyond the all-time high. That is very difficult because there are a large number of walls of worry for the market to go beyond this all-time highs and continue to rally strongly.
So why do you say that sustained rally is unlikely?
Well, a sustained rally is unlikely because the valuations are very rich now, and if the rally continues further, valuations will become too much stretched and there will be institutional selling and there will be profit booking from investors also, particularly HNIs. Therefore, this valuation question, valuations are not excessive if you are a long-term investor, but from the near to short term, valuations are high. Presently, Nifty is trading at above 20 times FY24 earnings. So, if the rally continues beyond this level, well, there will not be fundamental support to the rally. That's why I said I don't see any sustained rally beyond the all-time highs.
Which sectors are looking strong? What should be the investment strategy and what are the risks?
Well, a very important trend in the market is the sectoral churns that are happening in the market. Some sectors have turned weak, some sectors have turned strong, and some sectors are gaining further strength. Bank Nifty has been performing well, but during the last few weeks, Bank Nifty has turned weak. If you take the year till date, Nifty is up by more than 3%, but Bank Nifty is up only by around 1%. But auto index, Nifty autos, is up by 19%. Nifty Realty is up by more than 29%. capital goods are doing well. So there is a sectoral churn. What is happening in the financials, particularly in banking, is profit booking is happening, and a part of the profits are moving towards these segments like capital goods, realty, and automobiles. So that churn is happening, but it is important to understand that the valuations of the banking segment is even now very fair. It is not overpriced, it is not overvalued, because the prospects continue to be good. I would say that high quality, large cap stocks can even be bought now, because the credit growth in the economy is good, and the coming quarter results also will be better. But then autos, capital goods and reality are performing well, and the momentum also is improving. That is why this churning is happening, right? Coming to your question on risk in the market, this is a very significant question. There is a big risk in the market now, and that big risk is the poor performance of the monsoon so far, right? If you take the figures till date, according to the IMD, monsoon is more than 50% deficient in June till date. Right, more than 50% deficiency is huge deficiency, but this has happened in the past, and the next weeks, particularly in June, July and August, this deficiency can be compensated. But if this deficiency is not compensated, a monsoon will be far below the long-term average. If that happens, God forbid, but if that happens, well, our agricultural production will be adversely impacted. GDP growth will be impacted, corporate earnings and stock market also will be impacted. More importantly, food inflation will start rising because of the lower availability of food articles, and therefore the rate cut which the market is expecting now in early 2024 will not happen. So that is a risk. The market has not discounted this poor monsoon, but if it becomes a reality, that will become a risk. Therefore, this is one area where investors should be watchful.
Thank you, sir. Thank you very much.